So I've been, just 2 seconds on my own background, I've been doing this in the game space for about as long as Eric Goldberg, so about 37 years now. My first client, I've been a lawyer working in the Valley at a firm called Fenwick and West, and my first client was a little game company called Electronic Arts, and I grew up with them, took them public, did all their deals for 15 years, and so as part of that was my introduction to the industry, and I still do a lot of work for companies in the industry. So we have a great panel today. The topic area is there's a never-ending need for money and support for developers to develop and then publish their game. And there's a lot of different ways of doing that. There's a panel later on to talk to the venture community, but this is the how to partner with a larger company in the space. And let's start with introductions. And David, do you want to introduce yourself and a couple seconds in the company?
Sure. I'm an attorney as well, so just full disclosure, I'm sorry. I don't practice law anymore. I got my start in corporate development at IGN in the early 2000s. From there, I went off to create my own games company. And I've now come full circle back into corporate development for Asmodee, which is we are the largest board game company globally.
Hadi?
Guilty in being a lawyer as well.
Oh no!
But not practicing law as well. So somehow found myself leading corporate development. I've been doing that for several years at Playtika before, and today I'm leading the corporate development at Huuuge Games. A mobile developer, a mobile publisher, with some of the most familiar titles like Huuuge Casino, Billionaire Casino, Tap Tap Games, as you probably know. Happy to be here.
Thank you. Shanti? You're not a lawyer, are you?
I am proudly not a lawyer. Apparently I'm in the wrong place. But I've been in the games business for about 25 years, the last 15 of which have been free to play. I used to be a games producer before coming over to apparently the evil side of things in corporate development. So I work for a company called FunPlus, which is a large mobile game publisher. We're probably best known for our strategy game titles, games like King of Avalon and Guns of Glory. The company is founded in Silicon Valley, but grew a lot of our development capacity in China, so we have kind of a reputation of being a bit of a hybrid organization.
So let's start with the, this is a mating dance, right? You're looking for companies that are, or developers that are a good fit for your needs, and they're looking for larger companies to partner with and the ability to fund their development, get distribution support, all the other things that you get with a partner. What is the perfect mate? What is a good match for a board game company, a social casino company, multinational, a mobile gaming company? What are you looking for in a partner, and how do you find them?
Do you want me to start?
Yeah, why don't we start down at
I mean, obviously the answer is going to be individual to each specific company, right?
Yep.
I think that's what a lot of companies that we meet with, at least I can speak for myself, don't really understand, in the sense that it's heartbreaking in a sense. Like, it's the best part of the job and the worst part of the job, in the sense that you meet so many great companies, but so many great companies aren't really what you're looking for, right? Because at the end of the day, I know that I'm tasked to accomplish certain corporate objectives, and that those corporate objectives may or may not coincide with what that company is doing that I'm meeting with. No matter how good or how much they're crushing it on the revenue side, on the user side, we'll pick whatever metric, unless they're meeting some corporate goal for you, a lot of that stuff is irrelevant. So you sort of need to go through a checklist of things that say, like, we're looking for this, and we're also looking for that. And typically we use screens. I'm sure these guys use screens, and that's just sort of how we understand that. So for what we're looking for, and the reason why I got back into corporate development, is that Asmodee, our group, is sort of, we have ambitions from taking our IP, our global board game IP, into the entertainment sort of realm, right? And so we have created a digital division. We have an entertainment division, and those divisions are going out and doing things operationally. And I'm sort of a force multiplier, in effect, that I want to sort of acquire companies that can help them accomplish their kind of corporate goals either faster or better, right? And for us, that typically means on the digital side of things, getting us into genres of games that we don't have sort of core competencies with, right? Our organization is really, really good at digitalizing board games, but you know, we don't create MMOs, right? We're not an RPG developer. And you know, one of the things I clarified to our board and our management is that certainly you can try to develop that capacity internally, but that takes a long time, and you probably fail at it iteratively for several years, right? And so that's why, you know, corporate development is a reasonable means to accomplish our objectives.
So are you looking to find development and publishing partners where you license them your IP, or are you looking to buy teams to be developing on your behalf?
We're looking for both, really, you know. So we're looking for capabilities, essentially, right? And so if we can do that via a straight-up business deal, or we can do that through an acquisition. So, you know, the goal here is to sort of use, you know, our 300 plus IPs in the digital interactive space in a meaningful way. And how we do that is just sort of more inside baseball than anything, right? If it's a straight up publisher developer deal or a licensing deal, then the operational guys can take care of that, right? If it's more appropriate as an acquisition or some sort of strategic investment, then it gets kicked my way.
So, Adi, you come from a company that famously was very active on both the acquisition side as well as the acquired side. There was a lot of deal making that went around Playtika, and have moved to a similar kind of position. So maybe you can comment both on the what does it look like when you're looking for a partner from the Huuuge side, as well as kind of generally, if you were in that space, how would you want to become attractive to other major players in the space?
Yeah, sure. So I think we all need to always remember that the statistics is that 90% of the M&As fail the day after the deal. So I think for our job, I mean, we can push for the greatest deal ever. We can negotiate the deal terms. But if I have to kind of pinpoint one thing that I've also saw and learned at Playtika, but also we're kind of looking for the same thing at Huuuge, is that the company DNA is very much crucial for the day after the deal. So of course, I agree with everything you said. I mean, we have business objectives that we want to reach and some goals, but together with that and complementing the portfolio and all of that serious stuff, there is one key element that will determine if the deal is going to be a good deal or a bad deal, and that's, do we have a cultural fit with the company? And by the way, Huuuge is a multicultural company. We have 9 offices, we have 24 nationalities in the company, offices everywhere, so we're pretty familiar with the challenges and the upside of that. And we very much realize that if you have like the same hunger from the company that you acquire and the same motivation to grow together the day after the deal, I think that's essential. I mean, some companies would look for a game, not necessarily a team, and then the day after the deal, I mean, the management might stay, might not stay. I think if I have to kind of see and mention here something that would help the deal succeed is if we have a management that is planning to stay on board in most of the cases, that is still very much hungry to grow with Huuuge. And that's very much our culture at Huuuge. So we're looking for this similar DNA. So I think from that perspective, except for really growing the revenue, growing the DAO, and the same things that everyone are looking for, I think we put a lot of focus on that. Yeah, and I've seen it work before, and I think that's kind of the key thing for the future.
Is there a courtship process where you first want to have a development relationship or an equity relationship or something like that before you do an acquisition, or are you going into acquisition discussions with companies that are, you know, you're doing business with them for the first time?
So it really depends. To be honest, the way where I met Anton, our CEO at Huuuge, is under a Playtika hat when I was trying to buy him. So that's kind of how I learned about Huuuge and how I met him.
And he hired you instead.
And instead, yeah, it took a while, but yes. So I think having a relationship, obviously, before having some kind of business relation is important. I think for us, when we're looking at companies, it depends on the level, on the level of the company, right? If it's like an indie developer, that is pretty small still, we might offer him a publishing deal to kind of see if we can grow together with him, and then it might evolve to an M&A. Mm-hmm. I think if it's a more mature developer with a product, with some sustainable growth, then we can start a discussion with an M&A, but also have some kind of process where we learn more about the company, the management. We have confidence in the people that we'll be able to work with them the day after and really grow together. So it changes depending on the size of the company, and we're looking at both. So, yeah.
So, Shanti, how would you contrast your own, what you're looking for and compare to what you've heard?
Yeah, so I'd say we're quite a bit different. I mean, the point around like each company kind of having its own kind of need set is fair. I think our approach is quite different in that our company is very decentralized in its kind of core structure. So like, despite the fact that we've had kind of $2 billion kind of outcomes in our company's kind of short history, and we've grown to a significant size ourselves, we still operate very much like a small company. So each kind of independent game team and each studio operates very much on its own, call it P&L for kind of simplicity's sake. And so we are very modular, and we operate, like I've taken to calling it a federation of startups because I don't know what else to call it. It's a little bit of an odd model. When I was at GREE, I ran corporate development for this big Japanese public company. Very different, like very centralized, very kind of akin to what you might be familiar with from, say, a Tencent or, an Activision, that kind of a large corporate structure. FunPlus is not like that. FunPlus is highly decentralized and empowers each of the creative organizers of each of the game studios more like a VC portfolio. And so our relationships with people both inside and outside the company, meaning like wholly owned and partially owned through investments, kind of reflects that core difference. Meaning that, where like a big company might seek to find a specific match for, say, a given category that they were looking for, FunPlus tends to filter more heavily on the ambition and kind of credibility of the founding team of a given studio. Is this like kind of an idea and a group that could go after something that like might be $1 billion outcome someday? So again, like our founding team has had the good fortune to kind of walk that path twice, and they're kind of looking for like other folks who can do it with them like again and again. And so like our approach tends to be much more VC-like than kind of corp dev-like. And so, like that said, like that's on the investment side. So when we look at, kind of teams to invest in, like we go early stage, we go late stage, it's really not about that stage question for us. It's about why do we love this team? Why do we love what they're going after? Why do we think it's going to be big? How can we help? And those are the really core aspects to the way that we approach all of those questions. Acquisitions are different. So when you look at, kind of whether or not this is a good fit for becoming a wholly owned part of a company, I think that's a very different equation. And then the questions around fit become primary. So, like, how does this team kind of think about, like their future, both outside and inside this company, becomes very much something that you can think about together if you're honest with one another and say like, oh, well, if you think that you're going to grow in this category and all you need is marketing, here's how we can think about marketing together. Oh, you need help with, like say design and, like your monetization kind of techniques are not at, kind of the top of the industry. Perhaps we can help with that. And if you can kind of have that kind of conversation, like then you can unlock opportunities for what an acquisition is supposed to be about, which is creating value for both sides. Where like 1 + 1 = 3 is kind of this idea that is kicked around in boardrooms. That's what everybody's really looking for, and it comes from, in my experience anyway, great alignment and just pretty much kind of honesty and transparency around where we're going. So like once we hit the ground day one, like are we really going to be, like kind of able to, like, if I asked a member of the former management team and the new management team a question, like, would they both say the same thing? Would they be able to, like, basically drive an outcome independent of one another? And does that go down to the shop floor? Those are really the key indicators of an acquisition that's done well and is probably going places versus one that was kind of slammed down from some corporate boardroom and is not going to be received well by the people that matter, the people that make the games and the revenue on an ongoing basis. That might have been different back when we put things in boxes and it was a one-time thing. But when now the games are run as a service, it's all about running a live team over 10 years. And if you do an acquisition that's optimized for the short term, you've really handicapped the whole idea. And so from an acquisition perspective, there is a very kind of complex set of factors that have to sing well together. Like when we're looking at investments, it's very much about, again, like how a VC would look at it. Is this a great team? Why? Do we agree with, kind of their approach to the market? Why? And can we help?
And I think there's a key lesson here that if you're looking to the venture community for equity money, it's all about you. It's a little bit about them, but it's are you a good investment? Is your business model, the capital is going to map itself onto your business. When you're talking to a strategic partner, you need to be the right fit for them. You also need to have a good business, but it's more about the particular idiosyncratic match between you and the partner, and spending your time figuring out what makes the partner tick and what their priorities are is critically important. You can waste a lot of time, both yours and theirs, trying to make your great business match a hole they don't have. Just figuring out how that works, and yourself as the founder or working with intermediaries, trying to find that fit is really important.
In our case, I think we agree a lot more with when it comes to investments. We agree a lot more with VCs than we do with other corporate strategics. They tend to look at the world in that way, which is like, hey, I've got this hole to fill. Do you fit my hole? No, I'm moving to the next. That's not our approach at all. Our approach is very much like, what's great about you? Where are you going? Is this big enough? Is probably our big filter, which is the same as a VC.
That's a venture filter too.
And so we are much more aligned probably in our investment strategy with the venture community than we are with most corporate strategics. And we kind of behave that way. So I was actually meeting with a venture fund earlier today, and they were saying yeah, you guys don't really look much like a strategic actually. You're way over here, from the kind of the big kind of public companies, to you're way over on the other end. And that's fair. It's just a difference in approach, and that's why it pays to understand what is the mindset and approach of kind of the different folks who are out there. We are a company, but we kind of look at the world a little bit differently than say a big corporate strategic. But if you're talking to one, understand what they're all about. It's a really fair point.
So, do you do equity investments in small companies? Is that part of your remit, and how frequently do you do it?
For us, no.
Okay.
We're not doing minority equity investments, right?
And how about Huuuge?
So preferably not, but if yes, then a majority.
Okay.
I do have a point, though, that back to the previous question. The one thing that I would change or perhaps recommend to people out there that are thinking about doing this is that if you do engage with an intermediary, or if you're looking to sort of position yourself, spend some real time thinking about what you want to accomplish in the future. I think so much of the regular process is sort of on the financials and sort of background due diligence information. That's sort of just the ante, right? That gets us to what we need to do on our block and tackle job. But from everybody here, that's not the most important thing, right? The most important thing is to figure out what you want to accomplish going forward, right? And I think a lot of intermediaries actually sort of miss that point where they have these beautiful data rooms and you're like, okay, well, I have 2 weeks to figure out whether or not this is a great fit for our company, right? And I think that's, and just from the comments here, it just seemed to me that that's a really big point. So I would spend some time thinking about that.
Yeah, I completely agree. I would also say be open and choose your partner right. So the more open you are with regards to your future plans, because maybe it's okay if you say, I want to sell the business, I want to exit, and that's it. I mean, as long as it's kind of on the table from the beginning, then, I mean, for some of us it might work, for some not. But it needs to be clear, I mean, what's your future plans? To not get to a point where a day after the deal there is a misalignment on the expectation, sorry. So yeah, I would recommend that, and meeting face to face. I don't know if the guys agree here, but I think that, I mean, for me at least, I try to always, during a process, meet the company several times, the middle management, the high management. We're dealing with people, and we're going to work with them the day after. So Excel is, as in, we all love Excel, we live with that. But, but yeah, there is nothing better than a human connection and a personal connection. So yeah.
So yes, we absolutely do equity investments. We do quite a bit of them, actually, and we take minority positions. We lead on occasion when it makes sense, but we're quite active as an investor. So we invest in games, all platforms. We invest in esports. We're a very early investor in several esports companies. We're also an investor in digital media, including, currently that includes a peer-to-peer mobile live streaming company and a mobile game streaming company. The point around kind of in acquisitions, the human element and meeting the corp dev team. If anybody knows who Paul Graham is, he's one of the founders of Y Combinator. He wrote this fairly well-read blog post on why you should never talk to corp dev. I couldn't disagree more. Being a corp dev guy, I like to be talked to, but I think in games it's really, really fundamentally bad advice, because if you read another venture capitalist whose blog I like a lot more, named Mark Suster, he's got this post called Lines Not Dots. And if you have a chance to kind of digest these schools of thought, I think one of the things that comes through is what Mark is talking about is lines not dots, to me anyway, means like context. Being able to understand one another and where we're going matters a lot, particularly in games where like we look at one another's kind of achievements and try and understand what that means for the future. And so if, like my only exposure to your achievements as a potential acquirer is your data room and talking to your investment banker, clearly I don't have the full picture. Whereas if I've met you 10 times at various kind of like industry events over the years, I know your work, I respect your work, I've played your games, like that's a whole different conversation. And frankly, every good acquisition that I've been a part of has been because like we had either a prior working relationship from something, or we had at least that level of connectivity. And so the idea that like don't talk to corp dev, like they're kind of the enemy, I think is really, really like if you want to take that advice, at least go talk to the studio folks at that company, and like have a peer relationship with somebody at a company that might acquire you, and at least understand their corporate culture and how it really works. Because like if you're working with a good corporate development person, they'll shoot you straight. They'll kind of like give you a preview of what life is really like inside your new company. But you can back check that and fact check that through your own kind of personal network over a longer period of time, and it will serve you better, like as you try and grapple with questions like, well, I wonder what life would be like inside Microsoft or FunPlus or like one of these other companies. And if you don't talk to corp dev, big mistake. But talk to somebody, understand who these companies are, and give yourself the opportunity to like at least be a line and not a dot, I guess is the big point. Yeah. Because without context, bad deals get done, and they could be bad for you. So it's in your self-interest to basically understand the context that you're walking into and how they view you as that context gets cemented.
Yeah, I couldn't agree more. I think there's an and here, not an or. There's a lot of classic quotes. One of those is, companies are bought, not sold. A banker cannot package you and sell you to a buyer. They can help you in that process, but you're probably not going to be introduced for the first time to somebody who ends up buying you in this space. There usually has been some kind of relationship, probably multiple touch points between yourself and the company. The corp dev, I ran a corp dev team for several years, and we bought 30 companies, and the corp dev people are your ambassadors to the company that you're buying and can help you get through the hoops to make sure that you are a good fit. And the operating people, the studio heads, the P&L owners inside the business, you need to know them too, because they will end up being your boss, and it will be their objectives that you're being tested against. So you need to really familiarize yourself with them as well as others in the organization. Who's providing the tools, who's providing the ops, who's all of the pieces that will help you in the business. Because if you land, your expectation on a deal is that you're going to be able to perform in the new environment. And if you're in a federated FunPlus situation, that is one structure. If you're in a highly integrated situation where you need to, go have your entire team report at a location in a building and with a certain tool set, et cetera, that you need to integrate into, that's another situation. So understanding how that dynamic works, I think, is extremely important part of any M&A process.
To add to that, I would even take it a step further and say that for me, at least, in my view, corporate development doesn't stop once the deal is signed and the money's in the bank. So I see corporate development very much going forward also in at least the first year after the acquisition. So this is, like you said, your ambassador in the organization, and it's very much in our interest for the deal to be successful the day after. So I think it's your line and connection to all the relevant stakeholders in the company that has a lot of interest in succeeding. So use that. I mean, if you build a relationship early on, this will last also the day after the deal, and it will be beneficial for both parties. So yeah.
So I'm guessing I'm going to get a different answer to this. What do you think about co-investors and existing investors? I'm guessing that right. I think I know the FunPlus answer. It sounds like if we're talking about either a majority deal or essentially no minority deals, you're a replacement, not you don't sit alongside somebody who's already a capital investor in the company, unless it's a straight commercial relationship.
Yeah, for us, typically not. I mean, we will have some mechanisms depending on earnouts, et cetera, where you still have some minority ownership over time, but that gets burnt down over time over earnout or something like that. But typically we're in this to acquire the company.
Yeah, for us the same. I think the highest value that you can actually bring to the company is once you fully share knowledge. Don't hesitate, because you're not a minority stakeholder or something like that, and there are other forces in the cap table. So for us, I agree.
Go ahead.
No, so we have a very active investment portfolio. We sit alongside a variety of different investors. We just signed another term sheet with a large Silicon Valley fund, so we're co-investing with them. We've done deals alongside a lot of the kind of European funds that you probably know. And so we're very comfortable with VCs, sometimes angels. I think we do care that these things are structured in a way that we think advantages the long-term outcome of the company, and usually that creates great alignment with everybody, but not always. But in terms of our behavior pattern as a member of that kind of investor class, we look mostly like a VC, except we have a couple of pieces of value add that we can throw into the pot. We have, despite being founded in North America, we have extremely strong relationships in Asia, and so for a lot of Western companies, that's value add. We, as a game company, have certain pieces of tech and certain understanding and certain operational things that we can bring to bear, but none of that is basically from us. It's always pull from the company. So we'll have, usually the way it'll go is I will be the one doing the deal, probably with the CEO alongside their investors. The CEO will usually run something by me and ask hey, I know you guys understand LTV really well. Can you recommend this, that, or the other? We'll try and put them in touch with a resource. Their investor might call, their board member might call, say hey, we're trying to recruit somebody in China, we're trying to recruit somebody in Taiwan. We know that you guys have deep connects there. Can you hook us up? So we get that kind of participation with the ecosystem all the time, and part of it is because of the way we're structured and the way that we participate in various kind of startup companies.
That makes sense. So shifting for a second to your travel schedule. So the geography. How important is that when you're, there's a lot of great developers in, throughout Europe, Scandinavia, Korea, do you care where the teams are located relative to your own operations? Do you have the desire to build centers of excellence? What is your thinking in terms of where you're fishing?
We're pretty open. I mean, we're a global organization, right? I mean, we have offices and distribution centers in our primary business in every European country. We have offices in Shanghai, Latin America, North America, just everywhere. So we're pretty open to stuff. And we're also pretty open to non-traditional offices, work solution, that kind of stuff. So from looking at a company, I would say that geography isn't a deciding factor. There are areas of geographical interest to us, right? In the sense that, again, because of our strategic objectives, is that we want people to engage with our IP, Catan, Carcassonne, those types of things. And we find that in Asian countries associate with our IP less than Western countries, right? And we're going through sort of a study on why we think that is. Some of it's frankly just space, right? Some of our games take weekends, weeks to play. And so there is a thought there that the way that people connect with our IP in certain territories is through digital interactive channels rather than a physical one. And so I would say in some cases we have slight preferences for territories, but again, we're pretty agnostic.
Huuuge?
So from my side, I mean, regardless to my travel schedule, I think that, I wouldn't say that we don't care at all. I think time zone is an issue. I think although we have several offices around the world, we have Hong Kong, we have Tel Aviv, we have Poland, but I mean, still we are looking for some level of confidence in kind of the communication process, the culture. But again, it comes back to how strong the team is and how strong the management is. I think that I would feel more comfortable doing a deal in an area where I don't have an office yet if I have trust that the management team could kind of lead the way and stay pretty, working independently. So it really depends on the company, but I mean, obviously there are benefits to having someone in your same time zone with a direct flight, preferably.
And I'll come back to FunPlus on that one because I think you have a unique answer probably to that question. One of the things that over the years that EA did, and I'm curious to see whether you think the same way, several of the early on acquisitions were done for the purpose of establishing a management team in a geography so they could expand. So we did a small deal in Vancouver that became the Vancouver studio that has several thousand people. We did a small deal in Austin that became the Austin studio. And kind of each of the geographies other than the Valley were all based on acquisitions, but they became large organic growth opportunities. Is that the way you think, or do you want more lean studios in a specific geography kind of focused on their game and not trying to build a massive footprint?
Well, I think it comes down. It comes down to the company. Certainly, we have the same thoughts because we have, let's say, a fledgling sort of digital interactive operation today. Mm-hmm. But I mean, you can't take an indie studio that has 5 people and they all work in different countries and they all, they just check in code, right? You can't turn that into your next, regional office. It's just not possible, right? But where appropriate, absolutely. We've looked at companies where again, people and management is super important. We say, look, yeah, we can build around these guys, and that absolutely becomes part of the investment thesis.
So for us, I mean, it's not an objective. It's not let's open a site for the sake of having a site somewhere. Mm-hmm. But I do think if we find a talent pool that we think is interesting, then we'll be happy to kind of build and expand the team around that. So it's not a goal, but it's something that we'll be open to do for the right team and for the right product. Yeah.
So, Shanti, when you're out looking for minority investments, do you care where they are, or is this just,
No, we don't care where they are. We filter very heavily on, kind of the quality of the team, of course, and, like the ambition of the project they're going after. But the only reason we would care about geography really would be if it came into the strategic consideration of talent and how big your team needs to be in order to achieve the goals that you have for yourself. So, like, if you're in, like a small town in, like someplace, and it's going to be hard to hire engineers or artists or whatever it is that makes your plan go, then that would be a concern. But if you're located in, I don't care, Slovenia, then great. As long as you are credibly able to execute your plan, that's the interesting thing for us. So the geography is not it. What is it is basically the credibility of access to a scalable plan. And so scale can have a couple of different challenges associated with it. So in free-to-play games, like this is typically, like a bunch of the interesting pinch points are around back-end engineering, user acquisition, access to the right kind of design talent. Like these are critical questions for us. Geography isn't. And I think I worked at one of those regional offices at EA. I worked in the Vancouver office at EA Sports, being a producer on FIFA. And when we put games in boxes, again, like that was a reasonable kind of strategy to go into different countries that way and have kind of development talent in particular countries. But with app stores that are truly global in nature, like a team that is in, like a heretofore kind of remote part of the world has access to the same market as anybody else. And so the thing that's important is whether or not they can achieve an outsized business goal. So a team of 20 working in a place that isn't traditionally a center of excellence for us doesn't worry us much. What we want to know is how are you going to get that great outcome? And again, how can we help? But like the only thing that we would be concerned about your geography is if it limits your ability to scale. So if you are in a place where there's no access to engineering talent, there's no access to art, whatever, that would be a concern.
There's a little bit of a flip side there. As an example, BioWare for many years was located in Edmonton, which was not a hotbed of gaming, but it was just big enough that they could get the talent, and their turnover was less than 1% a year because there were no other jobs in the area that were interesting. So at least that was their theory, and certainly it resonated with the ultimate buyers of the business that they developed. But it was certainly not a typical stop on the Corp Dev tour to visit Edmonton.
Probably still isn't.
Probably still isn't. So how about your competition? So are you seeing, for a while, there was enough money flowing in the Chinese financial system that was just kind of spilling out and buying companies. And, I would be discussing in panels like this, and people would be complaining about the prices that were being paid or whatever. Is that still, it's been reversing for a while. Do you see that becoming resurgent, or is it still, are we still in a more normalized market where there are some competitors, but it's not, an insurance company that's based in China that's deciding to go into the gaming business?
Well, I think you're right. I think it's certainly reversed its course, and you're seeing those insurance companies and construction companies facing problems and actually selling assets at this point. So I think we've come completely full circle there. And again, look, it's not. The big thing for us is really fit, right? The price is the price, and we'll pay fair price, right? So I don't really even see that as competitive, honestly, right? Because look, if you think you're going to accomplish your end goals with a particular partner, whether it be me or one of these guys or somebody in China, you should do it, right? So it's not like I don't really see it as a zero-sum game, frankly. Certainly, people, sometimes it's distracting, right? When players come into the market that aren't necessarily endemic to the market, right? Because they just sort of, they make it messy for everybody else,
Yep.
right? Because they look at business plans, and I think Shanti had a very good point in terms of the quality of the business plan is super important. And because they're not endemic, they go, "This is awesome. We're gonna kill it." And you're like, "Well, I've run a game company before. There's these couple of points." So that's why I think it's just sort of more distracting than anything. But I don't see a lot of that anymore.
Yeah, I think the market is stabilizing. I think the only thing that I still see when talking to companies, I don't know if you share the same thing, is the expectations. So I think obviously it pushed all the multiples up, and some companies, I mean, we obviously know the more recent information, so we're kind of aware that we're not there anymore. But some of the smaller companies might be under the impression that it's what do you mean not a 14 multiple? It's what do you mean not a 22 multiple? Like, the expectations are pretty unrealistic. So I think, again, the more awareness there is in the market, it's obviously easier to have a more concrete discussion.
Yeah.
But I think by now, let's say, most of the companies are pretty aligned on what's going on, and it doesn't seem, if you're looking to cash out, to exit, then maybe it's still appealing and relevant. But if you are really the fit that we're looking for, I think, then it's something that you would be suspicious on how much could it actually bring you to the next level, how much could it help.
Yeah, look, I completely agree with that, and that's what I sort of meant by the messiness of it, right? And here's some cautionary advice, honestly. And this is, again, some inside baseball stuff, and I'm sure you're very familiar with this. If you get a high multiple, there are things that are attached to that high multiple, okay? It's not like people are giving you a high multiple. They're going to expect that ratchets up the sort of expectations, right? So if you are asking for a 22 multiple or whatever it is, you're going to be expected. I mean, the way that corp dev works is that, or at least I'll tell you how what I'm familiar with, is that there is an IRR that I have to do, a rate of return of investment that I have to do that sort of takes that into account, right? And so now you have a huge number that you have to meet. And when that number isn't met, there are a lot of upset people there, right? So a high multiple is great. It's just you need to understand what is attached to that.
It's not free.
It's not free.
It's not.
But if your business is killing it, you may be worth that. It's just you really should look hard at the mirror, right, and say, is that what we're going to do? Because at the end of the day, I think there's a notion of oh, we're going to do this deal and everything's going to be fine. But I actually see sort of that transaction. It's not the end point, right? It's sort of, ideally, it should just be a means to accomplish something for both parties, right? For the acquirer and the acquiree, it should just sort of be a step in that sort of the company's life cycle, right? But I think too often people get focused on that transaction as an end rather than a means.
And that's easy to say when you're the buyer.
Of course.
And the folks at Riot who sold a substantial position to Tencent at a $400 million valuation have a different point of view in terms of what where was the right place to exit. But
So 2 points on this. One, the number that is right is definitely different by company, and there's reasons for that. And so this is where understanding who your potential buyers are matters a lot. So the ability of that company to have a dramatic positive impact on the growth of the business that you bring in the door on day one affects their ability to pay more for it. So, like if they are able to basically take your company from, like 1 to 10, then they have a lot more leeway to think about like, okay, well, how much of that can I front load into the deal and pay you on day 1, and how much can I backload and pay you on, kind of year 10, or however you want to think about this spectrum. But if you talk to another company who's like, okay, well, I don't have anything to add to the value of your company. I'm just going to basically rebadge it, and now it's going to be called, like kind of your company presented by my company. Then there's no, you're going to get the bare kind of average multiple for that because there's no value add being created, so there's nothing to share. And so it matters a lot to understand how you're going to build a bigger business together. This kind of tracked back to the earlier conversation of like kind of having those, turning over those cards together early in the conversation and seeing if there is anything there. Because if you're not finding partners that can help you grow to a place that you can't get to on your own, why are you selling, right? Like that's a weird equation. So, but if you can find those people who can kind of jump you to higher places in the pyramid, then there's a real conversation to be had, and it should be one based on positives. How you kind of slice that up and how much is up front, how much is in the back, that's the art of it all, and that's fine. The other point I would make is about kind of the macro topic that you brought up about kind of Chinese money coming in and having like a warping effect. There's always money in the games industry having a warping effect. For a while it was the Chinese money, now it's the platform money. So right now you've got Apple, you've got Microsoft, you don't really have Stadia, but you probably should, maybe you will, and you've got Epic. There's money sloshing around in different directions, causing weird decision making at a bunch of different levels, including equity. So people are considering doing kind of platform deals instead of taking equity. Nobody really knows what happens when you do that kind of deal either. Because VCs kind of tend to fret, a lot about like cap table structures and signaling this, and they worry about like kind of the long-term guardianship of the companies that they become affiliated with, because they know that, hey, I'm going to be, a partner with these guys for however long it takes for them to kind of stop becoming a private company and start either becoming bought or a public company. And so, they have a lot of long-term concerns, whereas a platform player, they don't. They're coming in with a big check because they want your content exclusively on their store for a bit. And, who knows what that really means for them as a long-term partner. If it's just a single transaction, there's no equity, great, take the money, run, awesome. But it does have that warping effect. Right. And that warping effect is mostly always there. I've never really seen the game industry in a place where there was no weird kind of like side warping effect. And so, I think, there always is one. I think now, the last thing I'd say about this is there's so many sources of funding as a result right now. It's a really great time to be a game developer.
Agreed.
As a matter of fact, if I wasn't doing what I'm doing right now, I'd be doing what some of you guys are doing.
Right.
You can still do that.
Right. I'm not that old. But, the point is, you can get equity funding. You can try and take out a loan. I wouldn't recommend it. You can get funding from a platform. You get friends and family. There's more ways to fund a game studio today than there ever have been, in my opinion.
Yes.
And
I think that's right.
So there's a lot of great choices. And, I think that's where it matters to do your homework, to understand, what are these options? Why are they good? Why are they bad? But, in terms of money sloshing around, thank goodness, but understand what it means for you.
One of the things that I have seen, I think because there is availability of capital from sources that aren't going to want to buy you, building up value in your enterprise before you engage in a strategic conversation just makes sense, right? You don't, if you're still trying to put the pieces together to build your first product, et cetera, that's probably not the right time to talk to the strategic community, because you haven't put enough proof points in the ground to justify a significant valuation if they're even interested. So, exploring alternate sources, whether it's equity, I agree with the loans. I don't see that as a viable. There are some.
I heard somebody last week who got funded with a loan.
And I see that occasionally. Those loans are messy, and get a good lawyer. But it certainly tap those other sources first, or as part of tapping those sources, come to an equity-friendly strategic like FunPlus, who can help you not only with capital but also with operations, and isn't going to tie you up long term necessarily with a a desire to buy you or whatever. So in any event, that's just some basic advice. Great. Well, thank you very much, and thanks for your time.